Welcome to the Tuesday edition of the Tech Stocks Daily Podcast. Today we're diving into the hottest headlines from Silicon Valley and beyond. Wondering how Google is balancing courtroom dramas with its AI ambitions? Curious about Apple's steady reign amidst fierce market cap challenges? We'll also unravel the mystery behind Microsoft's jaw-dropping options trading activity. Why are the whales of Wall Street so intrigued? And brace yourself. MicroStrategy is making waves again with its bold Bitcoin plays. Stick around as we dissect these tech titans' moves, what they mean for your investments, and the future of tech innovation. Stay tuned. Your tech stock insights are just a play button away. Hey there, tech enthusiasts. Brace yourselves, because Google's been making headlines again, and it's quite the roller coaster of innovation, legal battles, and future plans. So let's dive right into this jam-packed Google saga. First up, we've got Alphabet, the parent company of Google, rocking the earnings world with its fourth quarter report. Sharing numbers bigger than some countries' GDPs, they hit a total revenue of $96.5 billion, up 12% year over year. Sure, that's a lot of cheese, but it slightly missed Wall Street's expectation by a whisker, $100 million to be precise. However, their earnings per share did give investors something to cheer about, beating the predictions by a modest yet satisfying 3 cents. Alphabet's Honcho Sundar Pichai sang praise to artificial intelligence and claimed victory on multiple fronts. He spotlighted how AI advancements and strong demand, particularly in Google Cloud and YouTube advertising, were driving this success train. They're pressing pedal to the metal in AI innovations, trying to outrun everyone else. But not all's rosy in Google land. China, casting a wary glance at Google's operations, is launching an antitrust probe. Cue dramatic music. While Google packed its internet search bags in China way back in 2010, they still play ball in overseas advertising for Chinese businesses. With a slap of new tariffs on U.S. goods texting its friendship status with the U.S. as it's complicated, Google's under the microscope for violating China's anti-monopoly law. Could Google face penalties? Hard to say, but they seem to live in the courtroom these days, so odds aren't completely unfavorable. Speaking of courtrooms, in yet another legal twist, Google's facing friction from a San Francisco federal appeals court over its beef with Epic Games. The clash? Alleged restrictive policies on the Google Play Store. Google tried to pull out the Apple card, arguing that Epic's similar case against Apple got tossed out. But the judges have been unimpressed, twitching their noses at Google's attempt to draw parallels between the Android and iOS worlds. It seems Google's been juggling so many legal apples, it might be biting off more than it can chew. All in all, Google remains tapestry of massive business ventures, punctuated by the occasional courtroom dribble. Whether blazing trails with AI or dealing with international probes and lawsuits, they seem unfazed and focused on IC, non-Kung rolling out innovative solutions to keep us glued to their products. One can't help but be captivated by the endless drama and brilliance as Google continues to evolve, challenge competitors, and even challenge itself in a constantly changing tech landscape. All right, tech enthusiasts, let's dive into why Apple has been hogging the headlines today. If you thought their news cycle was dominated by Siri gossip, think again. It's a cocktail of market dynamics, competition jitters, iPhone sales drama, tariffs tension, and a whole lot of AI aspirations. So grab your virtual popcorn because here we go. First up, Apple's market cap melodrama, currently sitting pretty at a staggering $3.4 trillion. But some analysts are betting against Apple's reign, forecasting Apple will lose its market cap crown in 2025. Why? Well, it's like watching a blockbuster sequel where the protagonist wavers. Revenue growth has lagged behind the golden years. Cue the somber violin. For nearly 12 straight quarters, Apple's growth track has been on the decline, flirting with inflation rates. However, their services pivot and juicy business margins might turn the tide if the storyline gets a much-needed AI boost. Speaking of boosts, Apple's swanky transition into AI has been trickling into their device ecosystem. Enter Apple Intelligence. Unfortunately, the rollout has been slower than a turtle at a racing car convention. Supported mainly on the newer iPhone 16 and top-of-the-line iPads and MacBooks, the gradual integration of AI is turning heads, but needs more runway to convince the average Joe. Tim Cook's magic word is AI, touting that where Apple Intelligence took hold, sales of the iPhone 16 were stronger, proving that AI could be more than a flashy tech buzzword. But wait, that's not all. Apple's fiscal year is off to a shaky start, with iPhone sales slacking 1%, thanks to fierce competition and maybe some lemonade sales tactics gone awry. The program may be faltering on home turf, but yield signs around Chinese tariffs have set the street on high alert. Recent commitments on tariffs might slap even more tension onto Apple's operations, already being affected by shaky iPhone sales in China. Fear not, Cupertino's got some fancy footwork lined up with supply chain diversification efforts. Taking cue from their historical renown, they're shifting some manufacturing beyond China to places like Vietnam and India, hoping to dodge the tariff tensions just in the nick of time. So to wrap up, Apple's headlines are a wild blend of AI dreams, fiscal turbulence, market expectations, and political chess. With their future resting on beefing up services and AI offerings while diversifying production chains, everyone's holding their breath to see if the $307 potential stock price in 2027 materializes. The Apple saga is anything but dull, so gear up, tech fans, the ride has just begun. Hey tech enthusiasts. Today's insights into Microsoft's world on the NASDAQ are sizzling hot, and no, it's not because of any literal software fire. Let's break it down. First off, we've got some serious gossip happening in the options trading area related to Microsoft. Picture this: big money, the so-called whales of Wall Street, are making some intriguing moves. Our friends at Benzinga unveiled this buzz, showing a high level of options activity that's raising eyebrows. It's like the financial version of a soap opera. Normally, changes in options trading strategies could be a precursor to larger market moves, and Microsoft's options today are like a Seinfeld episode. Tons of activity, and nobody's quite sure why. Here's the skinny. Out of 40 extraordinary options activities, we've got a mixed bag with 42% feeling bullish and 45% bearish. This isn't just a casual, let's buy a couple of puts and calls, no siree. We're talking $487,387 in puts and a whopping $547,915 in calls. It seems these financial behemoths are eyeing a price range of $320 to $580 for Microsoft's share. What this cryptic but thrilling activity suggests is that big league investors are bracing for something significant. Watch this space, as they say. Meanwhile, in another corner of the market ring, Microsoft's performance is being put under the microscope by keen investors and industry experts comparing it to its software industry peers. Our friendly numbers from Benzinga's automated content engine reveal some juicy stuff. Microsoft's playing the undervaluation card with a price-to-earnings ratio of 33.11, which is below the industry average. Translation? Investors sniffing around for growth opportunities might be interested, but don't pop that champagne just yet. Its price-to-sales ratio suggests that the sales might be a bit overvalued compared to its peers. The company is flexing its financial muscles with beefy profitability metrics. It's like they went full Schwarzenegger with an EBIT of $36.79 billion and gross profits the size of Jupiter, indicating robust cash flow generation that dwarfs industry averages. However, the otherwise jazzy tune hits a melancholy note with a drooping revenue growth rate of 12.27%, a smidgen paler compared to its peers' 13.58%. Yet on a cheerful note, Microsoft shareholders might smile at the lean debt-to-equity ratio of 0.21, showing wise financial stewardship. So what's today taught us? Microsoft's balancing between under and overvaluation. It's got seriously healthy cash flows, and hefty moves happening in options trading suggest drama on the horizon. Investors are taking a hard look to see whether they should dance to Microsoft's tune or perhaps wait for the next catchy number. Stay tuned and keep your investing antennae up. All right, tech enthusiasts, buckle up because MicroStrategy is making headlines again. Today, this software company turned Bitcoin behemoth has caught the gaze of investors, analysts, and even sovereign wealth fund enthusiasts, all thanks to its unique strategy of diving headfirst into the world of cryptocurrency. Let's kick things off with the options market buzz. Some heavyweight investors, whom I like to call the whales of Wall Street, have adopted a bullish posture on MicroStrategy. With a whopping $11 million put on call options compared to the $4.4 million in puts, it's clear that many are expecting the company to keep riding high on this Bitcoin wave. The options activities suggest that there's anticipation around MicroStrategy's stock moving within a significant price range over the next quarter. It's like betting on Bitcoin with a twist. Speaking of bets, let's talk about MicroStrategy's love affair with Bitcoin. Over the past few years, this company has shifted gears from being a business intelligence software provider to becoming a top Bitcoin investor. With its current Bitcoin holdings, 279,420 BT valued at approximately $28.5 billion, it seems like a wild ride. But wait, how on earth did they fund this crypto splurge? You guessed it, by leveraging their balance sheet and going all in with debt and equity offerings. It's like a financial roller coaster with Michael Saylor at the helm. Now, what's the game plan for the next 5 years? Despite the soaring returns, some experts are ringing the caution bell. While Bitcoin has gifted them mammoth gains so far, its volatile nature poses a significant risk. If Bitcoin's price drops, MicroStrategy could face a financial bind, especially with those convertible notes looming over their balance sheet. So, do their financial gymnastics make sense? That's the million-dollar question. Today, MicroStrategy's market cap is punching way above the weight of its Bitcoin assets, raising some speculative eyebrows. Is it a sustainable strategy or purely speculative madness? Only time will tell. And finally, there's the fascinating twist involving a proposed sovereign wealth fund under discussion, as floated by crypto analyst James Van Straten. Imagine the US government potentially betting on MicroStrategy bonds instead of purchasing Bitcoin directly. This idea includes fears that accumulating vast amounts of Bitcoin in government hands could dramatically hike prices, hence the preference for MicroStrategy's convertible bonds. So tech fans, what do you think? Is MicroStrategy onto something genius or playing with fire? Leave your comments down below and let's get a discussion rolling. I'm dying to hear what smart money, or rather smart minds like yours, think about this bold Bitcoin gambit. Let's get into it, folks. You've heard the buzz about Google, Apple, Microsoft, and MicroStrategy, but let's hone in on those sparkly candlesticks shining over at Microsoft. If you're pondering whether to buy, sell, or hold, here's my 2 cents. Given today's news, I'd be inclined to hold Microsoft stock. Here's why. 1. Options activity. Today we saw that the whales, those heavyweight investors, are swirling the waters with lots of options activity. While we see almost equal parts of bullish and bearish swings, such high levels of trading suggest something might be afoot. A significant price movement could be around the corner, but the market is split on which way it's headed. Number 2, strong fundamentals. Microsoft's firm foothold in its financials can't be overlooked. They've got robust profitability metrics, healthy cash flow, and a lean debt-to-equity ratio. In simpler terms, Microsoft's got the cash reserve of Scrooge McDuck and isn't over-leveraged, making it more resilient to any market downturns that might knock at the door in future episodes. Number 3, PE undervaluation, yet high sales price. The notion of undervaluation, paired with an overvalued price-to-sales ratio, portrays Microsoft as a paradox some adventurous investors might want to explore. Essentially, from a growth perspective, it's a must-watch, but you won't be walking away with a truckload of deals right now. 4, innovation and strategy. Mad tech chops aside, Microsoft's steady moves in cloud computing and increased AI integration support their long-term growth potential, like supporting actors contributing to an Oscar-worthy performance. They've got the strategy board filled up to bootstrap further success, so unless the script changes drastically, they're still in the sequel. Given this assessment, a hold might be your best bet unless you're particularly risk-averse or looking for explosive shake-the-stock price sort of returns in a matter of weeks. As always, what we're chatting about today is just an opinion based on available news, so make sure to do your homework, research thoroughly, and consult your financial advisor for insights tailored to your individual context before making investment decisions. Stay prudent, stay curious, and never stop digging for deeper intel. Today's market activity has been nothing short of a tech telenovela. From Google navigating courtroom dramas and AI ambitions, Apple's tempestuous market cap debate, Microsoft's hefty spotlight on options trading, and MicroStrategy's bold Bitcoin ballet. In a world where numbers speak louder than words, investors are left pondering their next moves in this high-stakes tech scramble. As Google's innovations continue to tug at the fabric of digital advancements, Apple guards its crown amidst brewing competition, Microsoft teeters on options market intrigue, and MicroStrategy juggles blockchain dreams. Each thread is intertwining today's tech narrative. Stay sharp, stay tuned, and keep riding the ever-fluctuating tech wave. So if you enjoyed our bite-sized roundup, don't forget to like, subscribe, and share the vibes with your fellow techies. Hit that bell icon too, if you haven't already, so you won't miss the freshest scoop tomorrow. See you next time.